Okay, so welcome to my channel. My name is Noel, and in this video we are going to discuss about order blocks. Okay, as you can see, so that order blocks is a specific price range or candle where institutions will be buying or selling against the retail trend or retail money. Okay, so this is a place where we normally institutional traders normally enter into the market, because let's read the second point. And it will validate the first point to make it clear. Okay, institutions leave order blocks for themselves to trade at a later stage. They will reverse the price to a previous order, then driving the price hard in the direction of the trend. That's the institution money. Okay, so let me go to my whiteboard and let me explain a little bit about what order blocks are. Okay, let me clean this. Okay, so here I'm on my board, and let me just explain how order block works. So if you know that when we are talking about like a trend, or let's say a bullish trend, we have series of highs and series of lows. Okay, that's wrong. Let me clean this. Okay, so welcome to my whiteboard, and okay, so I'm going to explain how the order blocks works here. Okay, so when you're in an upward trend, okay, we have series of highs and series of lows. That's higher high, higher low. Some call it impulse and correction and all. Okay, so this is how the order block works. Okay, you know, order blocks only works when we have a break of market structure. Okay, break of market structure is then when in a higher trend, when the previous high has been broken to the upward side. So this is the higher high. Okay, and this is the higher low. Okay, so the order block only this also is the higher high and higher low. That being said, let me just explain something a little bit for you guys. Okay, let me just clean all this. Now that we have that in mind, let me draw a good trend. Okay, so okay, so something like this. So you know this is an upward trend. You don't really have a perfect upward trend. Okay, so how I can just draw it, so let's take it that this is our trend. Yeah, okay, let's take it that this is our trend. Okay, now we have to identify order block. So our order block is only valid when a break of market structure occurs in the trend. Okay, so what is a break of market structure? We know that in this bullish trend here, we have, in every bullish trend or every successful bullish trend, we have series of highs and series of lows. That's, so we have the higher high and the higher low. Okay, higher high and higher low, and we need to break market structure before we can be able to get a bearish or a bearish order block in the market. So for instance, this is another high. Okay, this is the impulse, and this is the correction in the market. So let's say we've broken this our previous high, we've broken this high in the market, right? Now we name it break of market structure, BOS. Okay, some people name it BMS, that's break of market structure. I'm going to BOS. Anyhow that you want to name it, you can just name it. Okay, so what makes this, how we can identify the order block is what the last, since it's a bullish move. Okay, the last bearish candle which formed around here. Okay, let me color it. The last bearish move which formed around here before the bullish move came in place. Okay, so let me draw another. Okay, let me draw this one. okay, before the bullish move what came into play. Okay, so right now this last bearish candle is what we call an order block. Okay, this last bearish candle is what we call an order block. So price will definitely, we are expecting price to come and reverse at this particular zone before what heading to the upward side. Okay, and there are certain things to consider before validating another block. One, you should know that the bullish candle after the order block or after the last bearish candle should exceed the last bearish candle, which constantly indicates that the last order block around this zone here. Okay, those are factors that you need to get imbalance in between. So as time goes on, I'll explain imbalance and liquidity and all those kind of stuff. So let me just give you a brief example of what's imbalance. Imbalances are gaps between the markets which are yet to be filled. Okay, a gap between candles which are yet to be filled. When the institutional traders push price higher, they tend to leave gaps behind, which later they will come and pick those gaps in terms of orders to continue their run. So if we have a imbalance around this zone, definitely we know that our order block is valid. Not all order blocks will be tested, but most certainly most of them almost get to tested. Probably if it doesn't get tested within this year, it will get tested within this minutes or hours. It can get tested within the few hours or the next days or something. Definitely most of them do get tested. So this is what we came. So after breaking market structure, we know that price will definitely come to this order block. So we can normally enter here, okay, put our stops below the order block and then target the previous high, or probably we just roll with the trend and all. Okay, that's how order block is being formed. Yeah, so the same thing happens to a bearish order block here. The same thing happens to a bearish order block. So in a bearish order block, we have our trend break of market structure. Okay, so this is how a bearish trend looks like, as you all can see. Okay, so now we have our series of lows in the market. Okay, so we have the lower low, and we have the lower high. Okay, we have the lower low and the lower high. So right now, as already we already know that it's in a bearish trend. Okay, so we have a break of market structure around here, BOS, because price has broken to the downward side. That's continuing or validating our trend for us. Okay, so in this same example, I'm going to draw the last bullish candle which formed. Okay, the last bullish candle which formed, because as you can see here was a bullish trend because prices rose a little bit. Okay, before the downward candle came into play. Sorry, I didn't change the color. Before the downward candle came into play. So let's take it like this is our bearish candle here. So the same example with this one, we can just plot our lines around here. So we know definitely price came here. So this is what we refer to as the order block. That's the last bearish or bullish candle before the price continue, before the reversal in the market. So that was what they are saying. So institutional traders leave order block for themselves to trade at a later stage. They will reverse the price to a previous order, then driving the price hard to the direction of the trend. That's the real institutional trend that was in the market. So they will come back and reverse and take their previous orders. That means driving price high into the real directional trend of where the market was going. Yeah, so these orders can also be filled. These orders can also be called specific levels of either going short or long. If an order block is violated or broken, it qualifies to be a breaker block. Okay, meaning the price will go back and retest that order block. Sometimes we call it a failed order block. So normally I'm not going into breaker blocks today. I'll make a video concerning breaker blocks. Okay, that's what I'm going to do, because breaker blocks, we need to identify them on the chart, and today I'm just going to identify just order blocks. Okay, so after that being said, we just know the way how order blocks work. So simple, it's so simple. So let me just go into the chart, then I will explain how order block works. Okay, so this was a trade I was in last week. Okay, So this let's say, let me just look for let me just take a different pair so that we can I don't trade let me see, let me look for Australian USD. I think it was trending for some time though, so let's go to Australian USD. Let me clear everything if I have something here. So this is the 4-hour time frame. Okay, so depending on how you trade the order block, today we are just identifying the order blocks. As time goes on, I'll be creating a strategy on how to use the order block with the time frame that you want to use, or with the type of trader that you are. Okay, so for instance, let's take a let me just let me go back into time. Okay, so let's see. Okay, yes, here prices are trending a little bit. The price is really trending in the 4-hour time frame. So as you can see here, we already have our directional bias in mind. Yeah, we already have our directional bias in mind that prices are doing what? Prices are going to that one direction. Yeah. Okay, so now that at the back of our mind, we are only looking for what? A bullish order block. Okay, we're only looking for a bullish order block. So let's say, now let's name this this let me use this material. Okay, so this is a break of what? Structure, because BOS. Okay, okay, let me just name it, let me just name it like this, BOS. Okay, so this is a BOS here. So this is a break of market structure here. All right, so because we have a break of market structure, one thing you should know is that this is another block here. This is another block where you can highlight, because it was the last candle before they moved downwards. But one thing you should also notice is that as prices was coming down, we had retracement. Okay, we had retracement around this zone, so I can still say we had this retracement, a little retracement around this zone, and we created a very nice bullish order block along the way. Okay, so this is another block, and as you can see perfectly, prices came to retest this zone before heading towards the downward side. So you could just enter into this trade like this, then you target your previous lows in the market. Okay, you target your previous lows in the market. So as you can see, so the other side also happened. Okay, how should I even put it? This is also another break of market structure, right? So there's another break of market structure where price broke to the upward side, and as you can see, we created another order block. That's the last candle before. So you can see price came to that same zone and what? Retraced to the downward side. So this is simple. Depending on how your risk to reward tolerance is, you can choose to enter into the trade anyhow you want. So you just target the previous low in the market, then you continue. Some people can just hold their trades depending on your risk to reward ratio and how much you want to take profit. Okay, so let's continue. I'm going to take the last example, then we are going to like go into the bullish market. So if you look at this zone again, this was around this zone, we had a little bit retracement around this zone, which caused this whole break of structure. Okay, because it was this move that brought the structure down. Okay, now let's just delete this. It was this move that brought the structure. So let's highlight it and let's see what we had. Okay, so as you can see, we missed this trade by a little pip though, which is no biggie though, because probably would have gotten more entry. So this is what I'm just talking about, break of market structure. So as you can see, this was the previous low, and in this previous low, markets broke to the downward side, continuing or validating our trend for us. Okay, so another BOS here. Okay, so there's the last candle before it went up. So this is highlighted here, price didn't come, but I'm sure price will come later or something. So as you can see, price came to that zone. Simple. So this is how we trade order blocks. So you see, it created a little consolidation. This is something that we need to discuss. Okay, I would like to go through in one of my videos with you guys. It created a little bit consolidation around this zone here, getting liquidity, creating liquidity, because all the retail traders will be putting their stop loss here, because they will say here support, 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 and they're putting their stop loss around this zone here, and they'll be selling. All right, so what market did was that markets helped them. They sold, made a little bit profit here, those that were holding, and they came back and pushed to come and clear all this liquidity around this zone. So this is another factor that considers an order block. The liquidity, they will be able to grab liquidity to continue into the direction that they want to grab. Okay, so that being said, let me continue into the upward direction of order blocks. Okay, let me see if I can get, where can I get? Okay, I think there is a bullish trend here. There's a bullish trend, nice one here. So as you can see, this is a bullish trend because we've been able to break our previous highs here, able to break our previous highs around this zone. So this was the candle here. This was the last bullish candle that created a spike. As you can see, it's so big, but then how will I do it? Like, as you can see, this, you see, it came by break of structure, came back. Let me label this like this. Text US. Okay. So as you can see, this is the break of market structure to the upper side. Okay, but one thing you should know is that sometimes it creates gap, but we know we'll go through premium and discounts where I'll be able to explain. You know that you want to buy low and sell high at the discount and sell at premium. So we always want to get prices or order blocks below our 50% of our range. Okay, so let's say if I take my Fibonacci here, or any order block that is below this zone is valid. Okay, any order block that is below my 50% is valid, but normally I tend to take it below my 8.75% or something. That makes it more valid for me. This is also a good order block though, because it was below our 50%. So as you can see, it's a good order block, but then the major one is this one. So this is what I'm trying to explain to you guys. I think this is also okay. Let me do this. So let's say another break of market structure around this zone here, because prices broke to the upward side, continuing or validating our trend fast. So as you can see, let me clean this order block here. As you can see, this was the last bearish candle before the move up. Okay, so it's wigged us out. So in creating your strategy, you get to a point whereby you just don't enter in trade like that, because I do trade refineries. Okay, I would have to go into the 15 minutes time frame to look for another change, break of market structure there before I tend to enter into the trade. So after I've confirmed in my 4 hour, I will still go into the 15 minutes time frame, which is my entry time frame, to look for the same pattern, what is happening there. Because market is fractal, anything that is happening in the 4 hours is also happening in the 15 minutes, right? So you go there and do that. I'll go more detail today. I'm just explaining, I'm just going through what order blocks are. So these are subsequent examples that we will be looking at here. So there's, okay, so another one, break of market structure here. So basically that's what I'm trying to explain here. As you can see, you see this one, I don't know what USD, there's more selling. So as you can see, this is another break of market structure, because this was the last move up, okay, before the last move up before prices pulled back again. So this is another break, BOS here. There's another BOS here. There's another BOS here. So there's another break of market structure here. There's another break of market structure here. So let me just highlight the order block around the zone. So you can see as price left as price left, it came back to retest here to work it out. Simple. You've gotten your take profit here, and as you can see, this one also happened. This one also happened, simple like this. So the same thing, you've gotten another entry here. So this one you'd have gotten, look at this amount of pips. If you wanted to hold your trade for longer hours, you could have held your trade for longer hours. Okay, so let me use this one just to explain how to spot entries. Okay, right now that you've gotten your order block, because this is for the 4-hour time frame, it's so huge and all. So let me just go into the 15 minutes time frame to see, to spot another order break of market structure. That is when I'll get my entries right and correctly. So right now as prices came into the zone, yeah, this was the previous high. As prices came into the zone, all what you needed to do was to wait for prices to break below your zone before you could what, to create another market structure below to the downward side before you can do what, you can enter into this trade. So you monitor the trade, price broke, blah 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 blah, break of market structure. So something like this, market structure. So as you can see, price broke to the downward side, which was this one. We had a break of market structure around this zone, yeah. So you can just name BOS. Okay, so break of market structure, then you can highlight your order block around this zone. Okay, let me cancel this. Let me let this break of market structure around this zone. Okay, or you could still just use the same one as break of market structure or something. So this is how we use break of order blocks and all, to understand how order block works, so that it will validate you in terms of trading and all. So this was the same thing I did in my trading, and I was able to enter into this trade around this particular time. Okay, you can see I identified, this is the 4-hour, I identified my order block here. This is the last candle, the last bullish candle before my bearish move. I identified my order block around here. Sorry, this trade, I was involved in this trade. I think I entered this trade around 27th. So as you can see, I've highlighted all my order blocks down, because this was the previous break of market structure. I was expecting if prices would come to either this, but then this is at the 50% level. That was the reason why I couldn't enter. So I was expecting price to come to this discount zone so that I could be able to sell. So basically that's how I trade, that's how order blocks works, and it gives you more precise entry, and it reduces your risk in the market and all. So those are the points that you just need to know at the back of your head, that you can backtest them. So that at the end of the day you'll be able to do it, understand how order blocks works. I'll be making a video in depth on how to spot your entries, or let's say, because the market is fractal, how to identify reversal points in 15 minutes or in the 1 minute, depending on the type of trader you are. If you are a scalper or you are whatever, you can enter into the market or something. So that, I think that's the best I can do for now. So thank you, and I would like for you to subscribe to my channel, because there are more content coming up. All right, thank you.